An example is illustrating a harsh reality. Consider an example. Dave's Decks has been installing high-quality residential decks for the past 10 years. He's a sole proprietor with no employee and has done all the work himself. For the past decades, Dave's purchased through his agent in Curtis Bay ISO GL with no unusual endorsements. Policies he's been in force and continuance for the last 10 years at the cost of $1,000 per year. Dave's CGL policy always included coverage for the product's completed operations hazard. Dave has done well financially and has decided to retire. He sends his policy back to his insurance agent for cancellation. Policy is terminated on that date. The decks collapse. Fortunately, one of the customers is injured on the deck she's standing on. Later found that in May, when Dave built the deck, he forgot to properly fasten it to the wall. The collapse is the direct result of Dave's failure to fasten the deck to the wall. Mary's injuries are found to have been caused by the deck's collapse. Sues for injuries. In turn, Dave submit the complaint to his insurer. Surely there's coverage, at least defense, for mishap. Bear in mind, Dave has always purchased coverage for the product's completed operations hazard. Nevertheless, the harsh reality is that Dave's CGL insurer has no obligation to defend or respond in any way to the suit. Dave has no insurance. Why? After all, Dave did purchase product's completed operations. Here's the point. The CGL insuring agreements that pay only if bodily and property damage occurs during the policy period. While Dave did purchase product's completed operation coverage, as part of the CGL policy, the injury to Mary occurred about 2 months after his policy was terminated. Product's completed operations coverage for CGL is subject to and does not override this trigger requirement, even if the bodily injury or property does arise from the named insured's product or completed operations. Put another way, the product's completed operations coverage does not extend the policy period. The policy must be in effect when the bodily injury or property damage occurs. It does not matter that, or even if, CGL policy was in effect when Dave designed, built, or sold the deck. The occurrence-based CGL policy applies to the completed deck only if the injury takes place during the policy period. But see also the Montrose endorsement 15 years later. The supplemental extended reporting period, or tail, that is sometimes offered as a solution. Coverage gap simply doesn't work. First, the SERP or tail is not available on an occurrence CGL policy. Second, even if available, if Dave had purchased a claims-made CGL policy or purchased the SERP does not apply that occurs during the tail or reporting period. As the name suggests, the SERP only extends the CGL policy to include claims made against an insured during the extended reporting period that resulted from bodily injury that took place when the policy was in effect.